It was the safest bet in human history, the bedrock of every central bank, every retirement fund, and every global empire. For nearly a century, the US dollar wasn't just money, it was the world's shared language of value. But as we move through February 2026, it's becoming clear that the language is changing, and the bedrock is cracking. In the last 12 months, over $600 billion has quietly exited the US financial system. This isn't a market crash. It's not a panic-induced sell-off. It's a shadow migration. While the evening news discusses interest rates and minor policy shifts, the world's elite have stopped listening. They aren't just diversifying their portfolios anymore. They are abandoning the exit. Welcome to VaultedDocs. Today, we open the files on the great de-dollarization of 2026. This isn't a conspiracy theory. This is a math problem that nobody wants to solve. To understand where the money is going, we first have to look at where it's fleeing from. For decades, the US dollar was considered the risk-free asset. If a war broke out, you bought dollars. If a pandemic hit, you bought dollars. But this month, a tectonic shift occurred. Gold hit an unprecedented high, crossing the $5,200 mark per ounce. This wasn't because gold became more valuable, it's because the dollar became more questionable. The debasement trade has officially gone mainstream. As the US national debt surges past $38 trillion, the math is becoming inescapable. When you print trillions of units of a currency just to pay off the interest on the debt used to print the original units, you create a spiral. The elite, the family offices in Zurich, the sovereign wealth funds in Abu Dhabi, and the tech billionaires in Silicon Valley saw this coming. They realized that the full faith and credit of the United States was being tested by a debt-to-GDP ratio that has moved past the point of no return. Under the surface of the loud headlines of tariff wars and the 2026 election cycle, a quieter, more lethal process is happening. Central banks from Rome to Riyadh are repatriating their bullion. In a massive logistical undertaking, they are physically moving gold bars out of New York and London and bringing them back to their own soil. They no longer trust the digital promise of a dollar that can be frozen or devalued at the stroke of a pen. But where is that $600 billion going? It's flowing into what insiders call hard corridors. We are seeing a radical overhaul of global liquidity. While the West was focused on traditional banking, the BRICS Plus nations, now led by India's 2026 presidency and including some of the world's largest oil producers, have finalized a parallel financial architecture. The People's Bank of China has doubled its currency swap network, now boasting over 32 active partners. They have built a system that doesn't need a single greenback to function. They are moving from a system of trust to a system of assets. This is the rise of the commodity-backed era. The shadow migration is moving into copper, lithium, rare earth minerals, and energy-producing land. The elite are essentially pre-buying the future. They are trading paper promises for physical reality. In 2026, wealth is no longer about how many digits are in your bank account. It's about how much of the world's physical supply chain you actually control. Look at the luxury bunkers being completed in the Southern Hemisphere. While the media paints them as doomsday prep, financial analysts see them for what they really are: sovereign wealth enclaves. The billionaires aren't just building homes, they are moving their capital into jurisdictions that are decoupled from the Western debt bubble. So, where does that leave the average viewer? The shadow movement of this $600 billion is a final warning. When the people who own the system start leaving the system, It's because they know something the rest of us aren't supposed to see. They see the end of the long-term debt cycle that economists have warned about for years. The US Treasury is currently in a liquidity trap. If they raise rates to save the dollar, they crash the economy. If they lower rates to save the economy, they kill the dollar. There is no third option. The faith and credit of the United States is sitting on a razor's edge. An 18-year trend line is about to snap. And when it does, the vault won't just be open, it will be empty. You have to ask yourself, if the smartest money in the room is quietly walking toward the door, why are you still sitting at the table? The migration is happening in the shadows, away from the prying eyes of the retail investor. By the time the headlines catch up to the reality of the $600 billion exit, the door will be locked. The dollar is just the first domino in a much larger collapse of the old world order. There is another asset the elite are quietly accumulating, one that has nothing to do with gold and everything to do with the future of energy and artificial intelligence. It's a decentralized energy standard that most people still think is a speculative toy. We've already started the research for that file, and the data is even more staggering than the dollar's decline. History doesn't repeat, but it often rhymes. From the Roman denarius to the British pound, every reserve currency has an expiration date. We are living through the final chapters of the dollar era. The transition will be volatile, it will be fast, and for those who aren't prepared, it will be devastating. Subscribe to VaultedDocs. We don't just follow the money, we follow the silence. Don't be the last one to see the truth. The vault remains open.